Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday, the 10th of September 2024. And earlier today, we published a video entitled Why Gold Could Hit All-Time Highs This Week. When we produced that video, gold was well over $2,515. And we did say, beware, it may fall back a little, which it did, quite quickly, in fact. Now it's started to recover again, and we are still on site, potentially for all-time highs this week. The rest of this video is a repeat of what we published earlier, so if you've listened to the earlier one, there's no need to listen to this one. But if you haven't, we go on to explain why gold could hit these all-time highs. Now first, just a quick reminder, we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comment section below for those who have not yet joined that channel. We are actually going to change some of the content of that channel, which is why there's been a slight delay in producing new videos. Now last weekend we published our gold and silver weekly update. We've placed a link in the text and comment section below, where we said to look out for Wednesday's CPI data announcement. We also predicted that gold will trade broadly within $2,450 and $2,540, and silver between $27 and $29.50. At the time of producing this video, gold stands at $2,515, up $18 since Friday's close, and silver stands at $28.49, up 56 cents since Friday's close. In sterling terms, gold's up £20 at £1,924, and silver is up 44 pence at £21.77p. Now, Wednesday's US CPI report is anticipated to show a 0.2% rise for August, identical to the previous month, at least according to a Reuters poll. This data could heavily influence the Federal Reserve's upcoming rate decision. Markets currently predict a 73% chance of a 25 basis point cut at the September 18th meeting, with a smaller probability of a 50 basis point reduction. We have said we don't think there will be a 50 point reduction because we anticipate that unless inflation has dropped dramatically, and having seen what's happened to the oil price recently, we are expecting a lower inflation rate for next month, reporting on September. It's not quite there yet. However, there could be an additional 25 basis point decrease in November or December. That's our prediction in any case. Should inflation data surprise to the downside, expectations for a more aggressive cut could increase, which may drive further inflows into gold-backed ETFs and push prices towards the $2,600 level by the year end. Now, US equities were up yesterday, but European equities are down this morning while we await Wall Street to open. What has happened this morning, though, is more of a geopolitical event, in that Ukraine targeted the Russian capital today in its biggest drone attack so far, killing at least one and wrecking dozens of homes in the Moscow region, and forcing around 50 flights to be diverted from airports around Moscow. Russia, the world's biggest nuclear power, except for the United States, said it had destroyed at least 20 Ukrainian attack drones as they swarmed over the Moscow region, which has a population of more than 21 million, and 124 more over 8 other regions. Markets are still a little nervous as to whether this situation can escalate further, which is why we're seeing a small rise in precious metals, and equity markets are nervous. Gold prices, we stated on the weekend, were consolidating around the 2,500 level, and has been for the past 3 weeks. It only needs to rise $20 from the current price of today to beat its all-time high of $2,532. This could just be the push it needs to reach that level, but until we see the CPI data, it may hover close until the result is announced. Let us also not forget that tonight we have the Trump-Harris presidential debate. And depending on how that fares, there could be a slight but important impact on markets, potentially helping gold to further its advance. If the US dollar were to fall from its current index of 101.6 and say hit 100, that would be enough to push gold back to all-time highs in US dollar terms. Interestingly, James Hyschik of FX Empire reported today, quote, "Looking ahead, gold is expected to remain buoyant, supported by lower interest rates and heightened geopolitical risks. A likely 25 basis point Fed rate cut would maintain gold's appeal as a non-yielding asset, while persistent concerns about the global economic slowdown could add further buying interest." Additionally, seasonal demand for physical gold from India and China is expected to provide a tailwind for prices. While the market may remain range-bound in the short term, the overall outlook for gold remains bullish, with potential for prices to test $2,600 per ounce by the end of 2024. Unquote. Now, frankly, we would tend to agree with him, and can see gold at $2,600 at some stage by the year end, particularly if 2024 is typical of previous years, where we see a gradual rise of precious metal prices towards the end of the year. Now, Ruth Emery, the contributing editor to Money Week magazine, an award-winning financial journalist with more than 15 years' experience of working on national newspapers, websites and specialist magazines, stated in her article on the 20th of August, when gold hit $2,525, a similar price to the current level, this is what she said, quote, "The yellow metal has surged due to the prospect of lower US interest rates, with the US Federal Reserve widely expected to cut rates next month. Central banks have also been buying up gold, especially in countries like Russia and China, which has helped inflate the price. Meanwhile, the metal is increasingly being used in other industries like nanotechnology, cancer therapy, and fighting malaria. Investors have been turning to gold to guard against future interest rate cuts. In the United Kingdom, the base rate was reduced from 5.25% to 5% on the 1st of August, with more cuts expected this autumn. They've also been investing in the yellow metal to take advantage of the soaring price, providing some diversification to their portfolio and to preserve their wealth amid economic uncertainty." Unquote. Now, additionally, the investment bank UBS forecasted that prices could reach $2,600 an ounce by the end of 2024, and this seems to be the sort of, shall we say, goal that many pundits are predicting. Now, we caution for a moment that today's rise may very well correct a little before we see a further jump. You see, we suspect the news re Russia has caused this sudden leap, and that concern, which is fairly expressed, could dilute itself until we see the CPI data tomorrow. Because at the end of the day, that will more or less seal gold's fate. Unless, of course, the figures come in exactly as predicted. So we should expect to see some seesawing. And once we have the PPI figures, which are due on Thursday, thereby hopefully providing a guide to next month's inflation data, we shall all gain a better perspective as to where gold is going to end up by the end of this week. Everything is in place for positive momentum. But rest assured, markets love nothing more than to surprise us all. What do you think? Please do share your thoughts. Thank you so much for listening. We'd appreciate it if you would give this video a thumbs up, subscribe, press the bell sign. Pop on over to Finances Do Matter. I don't want you to miss the changes that are going to occur there very soon, certainly this month. Have a great week. It's 2 days into it, and we've got 2 very exciting days ahead.